Friends, welcome to Yadnya Investment Academy. In this video, we are going to see what are preference shares. Preference shares are also known as preferred stock. You must have heard about the recent preference share issue by Kotak Mahindra Bank. Now, as per the RBI guidelines for banks, promoter's stake cannot be more than 20% of paid up capital. And so as to comply with this guideline, Mr. Uday Kotak has reduced his own stake by issuing preference shares. So let us study what are these. Now we know what are common stocks. Let us see what are preferred stocks then. Preferred stocks are a kind of hybrid instrument with features of both equity as well as debt. Let's see how. Preference shares are entitled to a fixed dividend, and when it comes to dividend paying, dividend is first paid out to preference shareholders and then to common shareholders. Even in the case where the company goes bankrupt, preference shareholders would be paid out before common stocks but after creditors and bondholders. And that is the reason why preference shares would enjoy a higher dividend than the bonds issued by the company. Preference shareholders do not have any voting rights like the common stockholders do. Preference shares are generally given under private placements, that is generally to promoters, managing directors, certain set of private investors, etc., and are rarely available to retail investors. These can be listed as per the discretion of the issuer. In case of listed preference shares, retail investors can buy them through NSE or BSE terminal or via off-market transactions through brokers or institutions. Let us now look at the type of preference shares. The first type is cumulative preference share. Now we know that companies can pay dividends only when it makes profits. So if in a certain year there are no profits and there are no dividends to be paid, these dividends would get carried forward to the next year. And now whenever the company makes profits, all these accumulated dividends have to be paid to cumulative preference shareholders, and then dividends can be paid to common shareholders. The next type is non-cumulative preference shares. In case of these type of shares, unpaid dividends cannot be carried forward. So in case of non-cumulative preference share, whenever the company makes profits and announces a dividend, only in those years, dividend would be paid out to such shareholders. The next type is of participating preference shares. Now these shares do get the dividends at the promised rate, but whenever the dividend amount that the common shareholders cross this promised rate, these are entitled to receive the difference as well. In case the company is liquidated, these have the right to get the purchase price as well as the pro rata share of the remaining proceeds which the common shareholders are entitled to. The next type is of non-participating preference shares. The shareholders of these type of shares do not have the rights that we just spoke about when talking about participating preference shares. The next type is of convertible preferred shares, which allows shareholders to convert their shares to a number of predefined common stocks, generally any time after a predefined date, at the request of the shareholders. However, a company may have a provision on such shares that allows the shareholders or the issuer to force the issue. How valuable this type of share turns out depends upon the performance of the common stock. That is, once the common stock becomes more valuable, would decide whether you want to convert your preferred share to common stock or no. The next type is of non-convertible preferred shares, where your preferred shares cannot be converted to common stock. Another type is of redeemable preference share, which can be redeemed on or before completion of maturity period at the discretion of the company. Another type is of non-redeemable, also known as irredeemable or perpetual preference share, which does not have a maturity date. All the preference shares in India cannot have a maturity duration more than 20 years, and hence non-redeemable preference shares cannot be issued in India. Another innovative type of preference share is preference share with callable option. Companies here have a choice to buy back the share at a predefined price on or before a predefined date. And the last type we are discussing here is adjustable rate preference share, where the rate is not fixed and is formulated based upon prevailing interest rates. Let's take an example of preference shares. At the beginning of the video, we spoke about Kotak Mahindra Bank's preference shares, so let's take that example itself. It is a non-cumulative, non-convertible preference share with a call option that can be exercised by the company on or after 5 years. The dividend rate offered on these shares is 8.1%. The dividend is calculated on the face value, and the face value of these shares is rupees 5. So friends, that was all on preference shares in this video. Hope the video has been useful. Thanks for watching this one. Watch this space for more such topics. If you have any questions, do let us know in the comment section below our videos. And if you like our videos, please do subscribe and share. And now before we end, let me remind you that you can create your financial plan for free on our new portal, which is investyadnya.in. So please try it out. And you can buy our first book, which is a collection of 108 questions and answers on mutual funds and SIP on Amazon, Flipkart, etc. And the link to buy the same is mentioned in the description of this video. So see you in another video. Until then, happy investing.